a major geopolitical event just sent shockwaves across the globe. So today, we're going to break down exactly what happened and, more importantly, what it means for the markets in the week ahead. Let's dive right in. February 28th, 2026. You're going to want to remember that date. What started as a very tense situation in the Middle East just exploded, and it sent tremors through governments and financial markets all over the world.
So how did this all happen so fast? I mean, really, the timeline of just the first few hours? Well, it tells the whole story.
It all kicked off with a massive joint U.S.-Israel operation. We're talking nearly 900 strikes hitting targets all across Iran. Just 2 hours later, Iran fired back, launching a barrage of missiles and drones at U.S. bases throughout the Gulf. By the fifth hour, the conflict was already spilling over, with strikes hitting Dubai and Abu Dhabi. And then, in hour 6, came the move that put the entire global economy on a knife's edge. Iran announced it was closing the Strait of Hormuz to all shipping. Now, to put that into perspective for you, this is the choke point for almost a third of the world's seaborne oil. The implications of that, they're just massive.
You know, the war of words started almost immediately. Washington called it a major U.S. combat operation. Tehran, on the other hand, reported heavy damage and a lot of casualties from its counterattack, which they called Operation True Promise 4. And the immediate impact on the region? Well, it was chaos. Airspace was shut down across several countries, and tragically, reports started coming in about collateral damage and civilian casualties in Iraq.
So while the Middle East was in turmoil, a whole different kind of firestorm was just starting to erupt right here, back in the United States.
In an address to the nation, President Trump laid out the administration's case. He framed the strikes as a totally necessary defensive action, to neutralize threats. But he also went a step further, and this is key. He openly called for Iran's military to overthrow the regime's supreme leader.
Well, the response from Capitol Hill was swift and it was sharp. Congresswoman Alexandria Ocasio-Cortez called it an illegal regime change war, and she highlighted a really crucial point. It was all launched without any authorization from Congress. And listen, this wasn't just a partisan thing. This move reignited that whole intense debate over war powers, and you had lawmakers from both sides of the aisle questioning the president's authority to just act on his own like that.
And this really shows you the political tightrope the administration is walking right now. Early polling from YouGov showed that only about a third of American adults actually supported the strikes. So with two-thirds either opposed or just unsure, the political risk here is huge, especially if this conflict keeps getting bigger.
Okay, so with the geopolitical stage set, the focus now pivots to the global economy. The big question for every investor is, how are the markets going to react to this kind of shockwave?
This week was already going to be packed with key economic data, but now every single report is under a microscope. On Monday, that ISM manufacturing report will give us the first real look at how industry is reacting to these new supply chain risks. Tuesday's inflation data out of the Eurozone is now absolutely essential. I mean, a rising energy price is going to kill all the progress they've made, and it all builds to Friday's U.S. labor report. This was already the main event, right? But now, if we get a strong jobs number, it could make it really difficult for the Fed to even think about cutting rates in this new, potentially inflationary environment.
And beyond that big picture data, we're watching some key earnings reports for clues. Plug Power, for example, will be a huge test of the market's mood for rate-sensitive tech. A stock like that gets hammered when hopes for rate cuts disappear. Target's results? That's going to give us a real-time snapshot of the American consumer. Are people pulling back on spending because of all this uncertainty? And even a speculative biotech like Ocugen, it becomes a sort of barometer for risk. If investors are still willing to gamble on high-risk, high-reward plays, well, that tells you something about the market's underlying confidence.
So all of this, it brings us to a fork in the road. The events of last week have basically set up two very, very different potential futures for the global economy, and it all hinges on what happens next.
Let's break these two scenarios down. So, path number 1, escalation continues. If that happens, you can expect oil prices to stay high, which is great for defense and energy stocks, but it would almost certainly delay any Fed rate cuts, making that higher for longer narrative even stronger, which is bad news for growth stocks. Okay, path number 2, we see a rapid de-escalation. If that happens, that big spike in oil prices could fade just as fast as it appeared. That would likely trigger a big relief rally, especially in those rate-sensitive sectors, and the market's focus would snap right back to all that economic data we were just talking about.
So, that's the question, isn't it? The one hanging over absolutely everything as we head into this new week. Will cooler heads prevail, leading to de-escalation and a market relief rally? Or is this the beginning of a long, drawn-out conflict that means higher oil prices and a real risk of a global slowdown? The whole world is watching to see what happens.